Legal loopholes. Credit repair tactics exposed. Chapter 10. How to remedy identity theft. Part 6. How to remedy identity theft in 4 days. The Identity Theft Resource Center has said that it could take up to 600 hours to remedy the effects of identity theft. Additionally, the Federal Trade Commission estimates that it could cost victims as much as $1,200 to remedy identity theft and remove the fraudulent charges. However, there is a little-known provision, loophole, in the FCRA that allows consumers the right to block identity theft in just 4 business days from the receipt of a copy of an identity theft report. First, we must determine what the definition of identity theft is. The FCRA states the term identity theft means a fraud committed using the identifying information of another person, subject to further definition as the Commission may prescribe by regulation. Secondly, we must determine the definition of identity theft report. The FCRA, under Section 603, states the term identity theft report has the following meaning given that term by the rule of the Commission and means, at minimum, a report that alleges an identity theft, that is a copy of an official valid report filed by a consumer with an appropriate federal, state, or local law enforcement agency, including the United States Postal Inspection Service, or such other government agency deemed appropriate by the Commission, and the filing of which subjects the person filing the report to criminal penalties relating to the filing of false information, if, in fact, the information in the report is false. Lastly, we must determine what the 3 credit bureaus' responsibilities are in lieu of filing and identifying an identity theft report. The Fair Credit Reporting Act, Section 605B, states in relevant part the following. 605B. Block of information resulting from identity theft. Block. Except as otherwise provided in this section, a consumer reporting agency shall block the reporting of any information in the file of a consumer that the consumer identifies as information that resulted from an alleged identity theft, not later than 4 business days after the day of receipt by such agency of 1. Appropriate proof of the identity of the consumer. 2. A copy of the identity theft report. 3. The identification of such information by the consumer. And 4. A statement by the consumer that the information is not information relating to any transaction by the consumer. Notification. A consumer reporting agency shall promptly notify the furnisher of the information identified by the consumer under subsection A. 1. That the information may be a result of identity theft. 2. That the identity theft report have been filed. 3. That the block has been requested under this section. And 4. Of the effective dates of the block. Based on the above laws, the consumer must 1. File an identity theft affidavit stating that the account in question is not theirs, and 2. File an identity theft report with the appropriate authorities and mail it to the credit bureaus with the appropriate proof of identifying the consumer. That's appropriate proof of identity of the consumer. The account shall be blocked within 4 business days from the receipt of the receipt thereof. All credit bureaus have agreed to accept the ID theft affidavit available at www.ftc.gov/ID theft or call 877 ID theft. See also example 4 fraud letter figure 4.1.